Hey guys, welcome back. Today we are going to solve a problem from partnership dissolution, and this is from piecemeal distribution. And this particular concept is from HRC method, which is higher relative capital method. Okay, so what we are going to say is I'm just going to explain this entire problem with the solution itself. I'm not going to prepare a table for it because it's given detail only, so we don't need to spend time on preparing the table, so we can easily understand the concept and just no recall the concept. Recalling the way we process this problem itself is fine, because this is not that no, it has been asked for a long back, so they are not asking very frequently these problems, but there is a chance, but there is a very less chance also. So but knowing this sum is very useful for me, very useful for us when we attend the exam. Okay, so just understand the concept and just try to recall before your exams. Okay, right. The partnership was dissolved on 30th June 2024, right? Its balance sheet has been given. And the resolution was they have a capital of three partners: Hattrick, Mohit, Rupa. Okay, and then loan account was given. We have to pay 5,000 to Mohit, and the sundry creditors are 15,000. We have a cash of 5,400 and sundry assets of 94,600, right? So this needs to be realized and this needs to be paid off in the first case itself. And right, then these are all the capitals we have to pay off, and these are all the first priority creditors. Okay, loan and creditors should be paid first, without any compensation. Capital partners has to be paid on the PSR. Okay, right. Okay, that also in the proportionate basis also the assets were realized in the installments and payments. No, this the installments and payments were made in the proportional capital basis. Proportional capital basis means higher capital relative method only. So why they are called it as proportional capital basis is because they are calculating the proportion, they are calculating the capital proportion with the in relation to its in relation to their PSR, which is profit sharing ratio. They'll just compare the PSR and the capital of each partners, and who is having the correct proportion of capital. No, that will be calculated for everyone's capital. Okay, for example, if I'm having 10,000 rupees as a capital. For example, if I'm having 10,000 rupees as capital, my partner is having 50,000 as a capital, then 1:5 should be the PSR. Then we can easily allocate the amount to both the partners. But what if I'm having 15,000, but my partner is having 50,000 as 50,000 as a capital, but my profit share is 1 and his profit share is 5. So here you see he is having exactly up to the mark of he is getting a 5/6 of profit share for 50,000 capital, but I am getting only but I am paying for the I am paying 15,000 for the 1/6 capital. Okay, no, what I mean is here I am paying 5,000 extra. 5,000 extra capital I am paying, but I am not getting anything in return. So what's the high relative method is saying is, so the first 5,000 should be paid first. No, first 5,000 should be paid first, and then we should touch the second partner, which is 50,000 having. So that's what the higher related capital is. Higher related capital is whoever is having beyond their profit sharing ratio, they should be paid first. That's a capital proportionate method. Okay, so who is having the exact amount or exact proportionate exact PSR capital or below the PSR capital, they'll be paid subsequently, right? So the higher priority to the people who is having more capital, right? Okay, creditors are paid. Okay, creditors is 15,000. Creditors give 500 of 500 of discount to us, and the expenses of realization were made, which is 2,700, but the actual amount is 2,000 realized later. So we have to remove the 2,700 from the 5,400. Later we have to add back the 700, which was later realized that the actual expense is 2,000, you know. So we have to add back at the last installment. Okay, this is the realization savings. And then the amount was paid on 15th September, and draw up a memorandum of distribution of cash. Okay, This amount they are saying this 2000 is was paid on 15th September. So we have to realize at the time of September. Okay, we have to show as a savings of rupees 700 at the time of September. Okay, okay. The distribution of cash is the realization process is realized 12,600 realized on the July 5th July, and 30,000 realized on 30th August, and 40,000 realized on 15th September. So the partner shared profits and losses in the 2:1 ratio, right? Okay, so what we have to do is we have to prepare the proportionate table, then only we can straight away go to the statement showing the distribution of cash. Before that, we have to understand the calculation of higher relative capitals. Okay, what do we need to do? See what I have said. No, they have done this. The actual capital is 38,000, 24,000, 18,000. Right, the profit sharing ratio is 2 is to 2 is to 1. Okay, what we have to do, we have to divide all the capitals with the PSR. 38,000 divisible by 2, which is 19,000. 24,000 divisible by 2, 12,000. 18,000 divisible by 1, 18,000. See, by this we can understand who is having the lowest capital, in proportion to their uh, capital. Okay, so in proportion to their PSR. Okay, in proportion to the PSR, Mohit is having the lowest capital to the business. So he is having the 12,000. No, so what we have to do is we have to make the Mohit's capital as required capital. No, we have to what we have to do is we have to compute the required capital base by taking the Mohit capital as base. Mohit's capital is 12,000. No, so he is having the profit share of 2 by 5. So 5 by 2. So 12,000 divisible by 2 into 5 gives us 30,000. No, wait, not this 12,000. We have to take the actual capitals. Okay, 24,000 is the actual capital. We have to take Mohit's actual capital as base capital, and then we have to transform it as required capital. This should be taken as base. So 2 into 5, what will be the required capital? 60,000 is the required capital. This should be transferred. This should be apportioned as per the profit sharing ratio. Right, done. Everything has been done properly, right? So everything has been done. 24,000, 24,000, 12,000 done. So remove. Then we found the proportionate basis, and we have apportioned the proportionate capital also. So now what we have to do is we have to remove this actual capital and the proportional capital of Mohit. By removing that, Mohit will get out, because Mohit has to be paid last. Okay, that's why Mohit has been treated as nil. Whoever is prolonging to the last step, they will be paid first. That's what we are going to see. So the surplus capital he paid is 14,000, and the surplus capital Rupa paid is 6,000. So what we have to do is we have to surplus capital should be divided by the profit sharing ratio. Okay, 14,000 divisible by 2 and 6,000 divisible by 1, because the Rupa's profit sharing ratio is 1 and Atrix profit sharing ratio is 2. Divide that, you will get the surplus. No, you will make the capital comparable. So we make the capital comparable. Rupa is the one who paid least when we compare the Atric and Rupa. Rupa is the lowest capital. So make the Rupa's capital as the base and find out the required capital. Required capital is 18,000. Split this 18,000 into 2:1 ratio, because Atric's profit sharing ratio is 2 by 5 and Rupa's profit sharing ratio is 1 by 5. Because we are making it as 2:1. Right. If we split that, we'll get the revised proportional capital, which is 12,000 and 6,000. By doing that, if we adjust the required values, this surplus capital and revised proportional capital, we'll get the revised surplus capital, which is 2,000. So what this 2,000 denotes is Atric is paid the excess amount in excess of all the partners. So he has paid the 2,000 in excess of all the partners. In this case, what we can understand is Atric and Rupa paid extra beyond Mohit. That's what. So what we have to do is first we have to pay out the Mohit's capital of 2,000. Right, we have done. Next, we should go to the revised proportional capital. These 12,000 and 6,000 has to be paid. No, so 12,000 and 6,000 has to be paid. Next, this level of proportional capital. At this time everybody is paying at the should be paid at the PSR ratio only, so we have to pay at the PSR. So I hope you guys have understood the problem. What we have to take is we have to take the actual capital should be divided by the PSR. We'll get the we can compare the capitals now. At the when we compare the capitals, we came to know that 12,000 is the least capital, so Mohit has paid the least capital amount. So keep the Mohit's capital as base, and we compute the required capital. Required capital should be split as per the profit sharing ratio. We split and we found out the excess capital paid by the Attrick and Rupa. Attrick paid 6,000 as excess capital, and Attrick paid 14,000 as surplus capital, and Rupa paid 6,000 as surplus capital. And further we make these both people's capital comparable. What we do is we divide with the PSR, we get the 7,000 and 6,000. This is comparable. We understood that 6,000 is the excess capital paid by the 6,000 is the lowest capital. When we compare Attrick and Rupa, we make the Rupa's capital as the base capital, and required capital we found out is 18,000 at 2:1 ratio. So we done that 2:1 ratio. Then we found that Attrick is the one who paid 2,000 extra. So Attrick should be paid first. Then Attrick and Rupa should be paid first. Then all should be paid at the PSR. So this is the method where we focus more on who paid more capital, right? So we calculate the proportions and who is paid first and who has to pay next. When it comes to this creditors, Mohit, no, these are all the default peoples. We have to pay them first. But when it comes to partners, we have to find out who has paid the more capital to the business and who has paid the less capital. Less capital brought into the business will be paid last. More capital brought into the business will get paid first, right? Then at the point where they meet the proportionate sharing PSR equal, no, at that point we'll be paying everybody equally, right? First we have to arrange the liability of the business. Creditors and Mohit's loan, and Attrick, Mohit, Rupa capital we have been properly arranged. What we have is we have a 5,400 of cash in our business, and we have also estimated the 2,700 as realization expenses. So estimated realization expenses we paid. So creditors 2,700 removed, and the balance unpaid is 12,300, and as follows. This is untouched, so it will become as it is. And then the first installment we realized is 12,600, right? See, 12,600. That 12,600, what we have to understand is 500 is the discount given by the creditor. See, 14,500 has been paid in full settlement, but the actual creditor value is 15,000. So we have to take this discount. That discount is 500 written off from the balance unpaid. So the balance 800 should be paid to Mohit as against this loan. So the balance amount is 4,200. So the second installment comes. Second installment amount is 30,000. The Mohit's full loan has been paid. There comes the there we have the first 30,000 minus 4,200. We have 26,800 balance. No, sorry, 25,800 balance. No, that 25,800 should be paid. First 2,000 to Attrick, next 12,000 to Attrick, and 6,000 to Rupa. Then we have done the first two lines. See, this and these two have been done. That's what they have given the separate table also. You can see that first we have paid the 4,200 to Mohit against the Mohit's loan we have done, and we have to pay the 2,000 because he has to pay first. No, 2,000 we have paid to Attrick, and then 12,000 and 6,000 has to be paid as the second level priority. Second priority has been given. 12,000 and 6,000 done. The balance 5,800. No, it has to be paid as per PSR. See, as per PSR we have to pay the 5,800. 5,800, no, so 5,800 divisible by 2 by 5, 1 by 5, we'll get this value, and the total 30,000 has been distributed as 4,200, 16,320 to Attrick, 2,320 to Mohit, and 7,160 to Rupa. Okay, all these have been done in the separate table, and we have arranged the values only here. See, sorry, this is the value. We have arranged the values. So balance unpaid, after we deducting all the values, we have unpaid balance of 21,680 and 10,840. See, you can easily understand that these are all in the PSR way. PSR value. We have matched the by paying the by paying the persons who have brought more capital into the business. We have made the PSR equal to the capitals. So now we can, now any amount comes into the business. No, we can directly pay to these people. See, at the September we received 40,000, and during 15 September we realized that only the realization expenses for 2,000, so 700 should be the excess we have. So 40,700 we have. This 40,700 should be distributed as per 2:2:5. So 40,700 divisible by 2 by 5, we get 280 for 16,280 for Attrick, 16,280 for Mogit, and Rupas 8,140. That's it. We have a remaining balance, but we don't have any realization realization money. We don't have anything. So these are the losses that should be borne by all the three partners. That's it. The problem is over. Very simple problem. The logic is very simple. We have to pay the partners who has brought more capital into the business, and otherwise everything is the same only. So we can easily score 14 marks out of this problem. Thank you.